Welcome to Trading Lounge and the European Indices for the 26th of June. We'll be covering the Dax and the Footsie, more so on the Dax. The Footsee's pretty much got the same sort of pattern. So with the Dax here, we're looking at this count here. We do have another count on our website in our charts. I won't go into that here. You'll know what that is just by looking at the charts that get updated each day there. So with this market here, we're looking at this move down here as 5 waves. So in Elliott wave theory, once we get 5 waves here, after a corrective move, we should get another 5 waves down. So when we go to look at that here on the 4-hour chart, on the sort of intraday, we're looking at it like this here. Let me get it into frame, and this is how we're looking at it, really. So 5 waves down here for wave A, and then an A and a B and a C. Now, I'm really not happy about this here. It doesn't count nicely as a C wave, as 5 waves. So it does chuck a spanner in the works a little bit. It almost counts like a B wave up here, like an A and a B and a C wave up here. So that would put, if that is the case, I know that that's when, the US were tweeting and, some media things were talking about trade deals with China and so on. And it has messed it up a lot. But, it could put the situation as, we know that this is an impulse wave to this point here, right? So, this really here, this could be like an A wave here, a B wave here, and a C wave here. And then we go up here higher, either to the wave B over here, and then have the wave C down. Or it could be counted as 5 waves down here, an A and a B and a C for the B wave, and then the C wave tucked in under here. And in that case, we would just continue to go straight up from that point. So it's a little bit of a problem. This is what we're looking at it on the S&P 500 with 5 waves down here, and then an A wave here, and then an A and a B and a C for the B wave here, and then wave C up through to here. Now, and then down from that point. Now, it might not come all the way up here, so you'll have to watch the S&P video to find out when to go short and when to go long here. But that's what I'm going to do with the DAX. We just be accommodating in our minds, in our strategy, the possibilities, and then coming up with a trading strategy that can get us on the right side at the right time is really what we're trying to do here. So, just to recap that a little bit, there's a possibility that the market can move up to the 61.8% retracement level, basically where it is now, and then drop into wave 3 here and 4 and 5. So we need to accommodate that. We also need to accommodate a move that could take us to here and possibly even higher at that point here. So we need to look at that as well. And just on that note, you can see that why I'm cleaning this up here, that we're at that 500 there is going to be quite critical, and is probably roughly the 61.8% mark as well here. It's probably higher. Oh, it's close. Yeah. So that's really quite important. So even if you were trading, say, from 300 or 400 up to 500, you would have to exit at 500. And then you would have to, while I'm here, I'll explain this, while I'm here, get out at 500 or close to it at 498 or something, or even before that. And then wait for the classic trading levels pattern, which will be you know the whole story, the arrival, the reaction, the first high above the level, then the ABC, and then you'll have your trigger over this side over here. And if it goes up, it may just go up and test the 500 and drop from that point. But if it takes that second high out or the top, whichever you want to use, then you're going to be going up and will go up to 13,000. So it's something that we don't want to miss, and it's something that I need to put on the table there. So if the 500 becomes the support, you need a classic trading levels pattern or the variation on that to go long. You need to see it as support visually in your own way. We all learn in different ways. So some of this are visual. Yeah, so anyway, I think there's 4 different ways of learning. So you need to do what's best for yourself. So, but I'm just saying that 500 as support takes us up to the 13,000 at that point. Now, we'll be able to get a long position earlier than that as well, but we need to dive in and have a look at that. We also need to understand at what point we can go short here as well. And it will be a good idea to keep an eye on the S&P 500 as well. The video's there, so you'll be able to look at that and understand that as well. These two markets will just be, you know, if you're trading the DAX, you'll want to know where the S&P is. So let's go in and... Not sure which charts have updated, but we can just go in here. So this is what we will this is what we were looking at over the last from the last video. We were looking at an impulse coming down to 12,000, and then we were looking for a bounce to go back to the 61.8%. Now I'm not that keen on little spikes and so on through things, so I might just, well, first of all, we'll just do the right thing and take it to the 12,000, the low of the 12,000. That gives us the 61.8% right where it is now. Okay, and that's probably, well, it's the end of the session. The Asian session's just opened 10 minutes ago. And the other point here is to take it to 12,000 here. And that brings us up to the 12,400 at this point. So long as we understand that 12,400 is important. Also, what's important too in terms of the trading levels, because you know the trading levels between, say, each 1,000 points in this particular instance here, we have 1, 2, and 3 that make up 1, 2, and 3 make up group 1 here. If we get support on top of group 1, then the market will move up to the 5. And the market normally, this is also what you need to understand too, is that when a market's coming down through, it's a difference between a bull market and a bear market within group 1. When a market's coming down through into group 1, it bounces, didn't bounce off this one. You can see how it bounces around the 1, 2, and 3 a lot. So when you're coming down short, you need to give it a wider stop, and you need to understand that. You need to understand when each level is being tested as resistance. When you're climbing up, it gives a better move. You can see here that, well, it came up to the 2 here, dropped back to the 1 here, and then moved up to 2. You can see it's got a little classic trading levels pattern sitting here, the arrival, the reaction, the first high above the level, then this. So that would have been the place to go long here. And the same with this as well. So that gives us a little bit of a edge here to go long here, but we'll drill in further to have a look at that here, because support on top of number 3 here would take us to 5. And the market normally, between 3 and 5, the market moves quick, up or down. It just tends to move quite quickly. So, and that's also the same too from 8 to 5. Well, I always say from the midpoint here, 5, then we've got group 2, 65, 72, and 80. So normally the 72 there, from 72 up and down here, moves quite quickly in these two spaces. These are the numbers that you want to trade between. This is for, if you want to get from 12,000 to 13,000, then this is the building process in here, and you look for support. If you get a tested support on top of number 3, then you get to 5. So first of all, in here, what we can do here is that, first of all, any move that finds the 12,200 as the resistance, then you can short from that point. Okay, so that's where we'll start with that. Now we should be able to get a better position than that, but I'm just saying that the market, if the 200 becomes the resistance, then the market is failing at that point, and that means that we will move down, you know, through the 12,000 here, and continue to move down. Right, so that's one thing. The other point here too, I think we'll just go to the 15-minute chart here, and I'm just trying to make this as clear as I can here, and I know that I tend to waffle on a little bit, but I'll try and keep that in check. So technically that low here, if that's breached, but what we're going to do, we're just going to bring that down under the 200 here for the time being. Now, the move up here, if I've got my things, I might just borrow some from over here. This is just another count, don't worry about that too much. So, first of all, in our original thing, we're looking for the market to come down, and we're looking for this to be wave 1 here. And so I'm going to put wave 1 here. And then we were looking for, copy this, we're looking for the market to pull back to the 61.8% mark there and become wave 2 here. So that would be something like this here, as an ABC pattern here. I'm not sure, I have to count this here. We'll go in and we'll count that. So this is at 12,300. So this particular pattern here that we're looking at, we may be able to see that at 300 here. So we know that we could look at this as the arrival, the reaction here, the first high above the level, and then the ABC correction. So we can draw it out over here. We can do this pattern here. So it's didn't quite get to the 300. Let's just call one of those tops in there as the top, whichever one you want. And then the market's coming down through here now. So it will come down here. It will test. Let's just say that it's bullish pattern. So it'll be looking like this here. So once you've got that second high in here, let's just say there'll be 5 waves coming down here, whatever. So there'll be some sort of move back up there. Then that will fade from that point. So that will give us the opportunity to move in there. Okay, so that's really that one there. So it's kind of, it's like this one here. That's a bit big, that one. Let's just grab that. And it's always good to go try and find the second high, but the top one's the important one at the end of the day, but the second high is like in the middle. But you could also get one on support here right on the 400 as well. If that, there should be another little classic trading levels pattern in this space here, and this one here as well. So when that goes up here, just in here, you should be able to get a classic trading levels pattern in here. Then you use these to build in. So you got 1, 2, and 3 trades to build into. But we use, you know, we refine that. We use group 1 here. So from 300, there'll be 10, 20, and 30. So top of 30 will take us to 50, and so on. So, so we can go long from this point here. We can go along from this point here. We can also look to go short if this count here is correct. We're going to go under the 200 here. That's the sort of the easy one. And it's the same pattern to the downside. So it'll be, the market will come down, it'll bounce off that level, and then it'll come through here, and then it'll go back. It may just continue to the upside there. That's what you've got to be careful. So you use this one here to go under here, and it's important that you wait for that, and then if it fails, then you're okay to go down at that point. Now you just to cut things a little bit fine here. You could short it from this position up here, but you'd want a few things on your side here. Now this first move down through here is likely to be 5 waves anyway as an impulse, but it may just be wave A coming down here. So we'll put that in as wave A, and then we would have wave B going back up, and then we'd have wave C coming down. I don't know the count. We've got to go and have a look at the count next. So what that's given us there is 1, 2, 3. So that can be an ABC pattern, and the market can go up from that point and go through there and trigger you long. But at the same time, what you could also do as well, if you're looking on the short side, you can go short under here as well. We'll just make that, oh no, we'll leave it as it is, because the thing here is that you've got 3 waves here. So that's corrective. Any further down than that, wouldn't be 3 waves. You've breached the ABC pattern at that point. So that means that it may rally back up here, but then may drop down through here. But the point is you've got the A, the B, and the C. So anything below that corrective zigzag pattern would create the bearish pattern. And then you'd also short here under the 200, under the 100. There'll be a bounce here. Wait for the 1200 to become the 12,000 to become the retested resistance again. Same patterns to the downside and locking under here. So we need to understand this a little bit better here. I've just counted as an A and a B and a C wave here, but that may not be the case. We may be looking at, you know, a higher move here in wave 1 and 2 here, and a 3 over here somewhere, and a 4 coming down to here somewhere, and a 5 going up to here. So this is what we don't know just yet. And this is, yeah, it's just, I know it's annoying. And I wasn't expecting it, but it was something that popped out into the S&P 500, and we need to look at that. So this is 100 ticks. So that's kind of interesting, because we've already got this move down through here, and then an A and a B and a C wave here. So this is a corrective A, B, and C here, or wave 1, back for 2, and then down for 3. I can't recognize all of that, but it looks like a little wave 4 in here. So probably 1, 2, 3, 4, 5 coming into play here. That's kind of finished. So technically we could go long. Well, that was the second high that we're talking about here. But we could also, if I look at, don't particularly want that. That's what we want, the horizontal line. We want to move that out of the way for a moment. We want to just darken that one a little bit, because that we treat that as a minor level. So the 300 is the minor level there. Okay. So now we want to go into sub levels. So this one here, copy this horizontal line, that will also be at the 200 there. And I'll just lighten this one here because what we got here is subgroup 1. So if I was going to go long here, this is what I'd be looking for. I would be going 10, 310. Oops, didn't let go of it. 310, 320, 330 in there, 330, and then the next level is 350 in here, isn't it? So 350 here, and then the 80 here. And then you got group 2, 65, 72, and 80. So what we know is that if we get support, the first thing is that, because we want to go along above that high, but the first thing is that if we get support on top of subgroup 1 here, 1, 2, and 3, if we get support on that with a classic trading levels pattern, then we know that the market is leaving the closest largest number, the 300, and it will push up to the 500. So the safe trade would be to have the 330 as support for your first trade, and then when the 5 here, the 50 the midpoint becomes the support, then you want to move in on that and go long on that one. And then you can also go long on that one there as well. In this particular case, because we've got the bearish pattern here as well, if we knew that we were just going as a bullish pattern to the upside, we could also build in on top of the 300 here as support, and 10 and the 20 and the 30. But I think that we just need to understand where the risk is, because we just need to know how much exposure that we're going to have for this. So in that regard, we want to be looking at this level here as well. So this is the 50-60% retracement level, because if this was going to go down further, then it's going to come down here and it's going to go back up and test this space in here and then drop from that point. So that's where it could fail from. So you want that zone there as support, not as resistance. So yeah, I'll leave you with that. That's cool. So going long on top of that 61.8% or top of group 1 here, or you could probably do it at 20 as well, but you just want a really nice support there, right? Because you can see that the supply is sitting here, and if the supply here becomes the demand, the support on the 20, you could get a small position in here and then build onto this one here. So, but that said, let's just go in and have a little look at this. So, I mean, as you know, we've been counting 5 waves down and to the 12,000, and that was a 61.8% mark. So it's all pretty good. And as I just mentioned before, we can look at this here as an ABC pattern here, as an A wave here, a B wave here, and I'm not quite sure about this here just yet, but we can put that up there. But I'll just remove these for the time being here. So I'll just put these back. We're aware of that. So we also need to look at this. We can look at this as wave 1 and wave 2 here, or wave B. What I'm interested in is looking at this structure here for this. So we just need to see here. This is the low here, and it's probably 1 and 2 here, and 3 and 4, and 1, 2, 3, 4, 5 here. So that's a C wave there. So it's definitely, because I've got to work out which is the right low here for this. So, and this will be 1 and 2 and 3 and 4 and 5 to that point here, and the A wave 1, 2. Oh no, I need that one on that side. It doesn't matter. It doesn't matter. I won't go into that. I'll spend my time on the. We know that that's the point there that that we need. So I'm interested in this one. See, my first look at this here, you know, we know that that's the low from the previous correction. I could look at this as 1 and 2 here, 1, 2, 3, 4, 5 here for the third, fourth, or it looks like an A wave here, so a B and a C here for the fourth and fifth. So we also know that that's 1 and 2 in here somewhere. Now, I can't call that the third wave. I can't go 1 and 2 here and third wave here. It's just too small. But what I'm looking at here is I can't call that the third wave either, because it's smaller than this one. So that doesn't fit very well here. So the only way to label that would be to label that wave 1 and that wave 2 here, and that wave 3. We know that that's the top there, and we know that we're looking at a wave 4 here, and we're looking for a wave 5 here. So that still brings us up. You know, even if we were looking at an A wave and a B wave here, then we still need 5 waves in the C wave here of 1 and 2 here, and this would all be the third wave here, and then the fourth and the fifth, which is going to take us higher. So it looks like it is bullish in a way. So if we take this here as 1 here and 2 into this space here, and we need a 3, so we'll just borrow this one, copy that, 3. I'm just making assumptions now. So that gives us that structure to the upside at that point there. Always helps to swim between the flags. So it looks bullish, you know, because I can't count that as 1 and 2 and 3 and 4 and 5 here, because this is too small. It's even smaller than this guy here, you know, than this leg. So I think this has still got further to go up. So We're looking to be short under this level here. Under the 200, that would be a collapse of the structure. And then we need to look to go long in here, as I mentioned before here. Actually, this is also a short trade set up here, by the way, too. So you could short under here, because this market's coming through the level and it's going back up and testing it. Now, it may not fail. I can't draw on this side over here, so it's a bit tricky. But so how far it gets you is a thing. So you just make it a very small position here. But we're just talking about the long trade for a second. Let's just say that this might just come down here and trap you and then move on again. But the long trade here would be sitting on top of 30. So just on terms of recapping, that's where we would be for that. Okay, so that's the long trade there. I can't really put a green thing there. I'll try. Put a small one in there. I know I'm taking a lot of time with this video, but I don't know what's going on here. That's not really working for me. Just really to remind myself. Okay, so that's where we are with this at the moment. We'll go long on that support, and you can look to build onto that as well. So just recapping all of this, it's going to have problems at the 61.8% anyway. That's there, and it's also because you're on group 1 here as well for this, top of minor group 1, so 100, 200 and 300. So getting support on top of this level here would take us to the 500. If it's going to fail, this is pretty much where it's going to fail from, and it is at the 61.8%. It just doesn't give me a nice ABC correction, because the problem with the A, the B and the C wave coming to this point here is that the wave structure in here is too small. So it's giving me more of a bullish pattern through here. So look to go long on that 12,330. That would help out a lot there. In terms of going short, we will want the 12,200 to be the resistance at that point. And well, the fact of even, the fact of coming down and breaking out this one here, this low here, that negates the count to the upside as well. But the problem coming down to the 12, if I got you to short here, what would happen is the market would come down, bounce off here, and you'd have a win and then a loss, and then you'd be holding that. So we don't want you sweating out there. So, but understand that that's the point where it confirms that the trend is broken down from that point. Okay, I'm going to go to the Footsie quickly, but it's all pretty much the same sort of thing as well. So we were looking with wave 1 up here, an A wave here, a B wave here, and a C wave moving down. There's problems with this. It doesn't give me a nice 5-wave structure here. So same thing can apply again. It can be, let's borrow these here. It can play out as an A and a B and a C wave sitting here. So we need to be mindful of that situation. In terms of it, it should be close to its resistance level as well at this stage. So coming down to here, it's pretty much on the nose. So there we go. So pretty much if that number there, the 6,220, becomes the support with a classic trading levels pattern, then you can also go long from that as well in that instance. But we'd like to have a look inside this. So maybe I'll just cut through here. I've already done this. I've done my homework, which is good. So we know that it can fail from this point. We should have a little look at this structure as well in here, just on the tick chart, just to have a bit of a look at it. Yeah. So we just need to be mindful of all that. But the good news here is that at the 6,200, you know, it's creating that that high here, so we can also go long above that high here. But let's just go to the 15-minute chart, see if I've done that. If not, we'll go to the tick chart if I haven't done anything here. Haven't really done anything here for this, but I just want to, same thing's happening here again. We see 1 and 2 and 3 and 4 and 5 here, and then the correction, then this. I mean, maybe in this case you could have 1, 2, 3, 4 and 5 coming into play here. But let's just go to the tick chart. I have to double check and pull it apart. I've already done some work here, that's good. Because I've labeled it, then I know that if I've labeled something on the tick chart, then I know that I've done my homework on it. So I would have counted all of that. So this has still got 1, 2, 3 here. So 4 and 5, we're still not even at that high just yet. But you can see that it's giving us this, markets are just trends and corrections of different degrees. And the corrections happen at certain numbers. So we've got whole numbers, even numbers, and then odd numbers in that kind of order. And we use the levels, of course. So all of these through here from 100 to 200, these are minor levels. So we can look further into these, into sub-levels. And didn't go very dark straight away, did it? I think there's 2 lines in there and it just hides. Yeah. So minor level 100, minor level at 200. Then you got 1, 2, 3 here for the group 1. So you could have gone, there's a little pattern here, you couldn't go long above there. Then we go up to, it's at 30, then we go up to 50 here. So at the midpoint here, 50, you got another pattern here sitting across here. So they're just helpful. And then we go to 65 here, 72 and 80. So I don't need to go in there, but yeah, so what we're looking for here is top of group 1 here, just to cut things quickly short bit. So from 200, then we've got 10, 20 and 30. If we get support on top of 30 here, then we're going to go to 50, right, which is here, the midpoint here, 50. We know that we're at the 61.8% mark here, so the market could fold over from here, but I just don't see, unless that's 1, 2, 3, 4, 5 to there, that would be sort of helpful. And that's rather a large wave 4 here. So maybe I need to check, this is where you need to check the cash market here for that. Let me just check here. No, still 1 and 2 here, and then the third wave would be 1, 1 and 2 and 3 and 4 and 5 here. But I should check that on the cash market now that I can see that. Same pattern. So that means that at 200 here, we need to, first of all, know where the 61.8% mark is here, and then we need that as support, so then we can trade long above that. I'm just talking about safe trades. You know, we can you can get in anywhere, but if you want a good win-loss ratio, then you've got to put in a little bit extra work. So that's at 10. So that's fantastic. So that's 10 and 20 and 30 here. So what that means is that we can get our first long trade on 62.10 here, and then we can add on 20 here and add on 30 here, because this is the 61.8% here. Where, you know, it's correcting because of that, and also probably more so, partly because of that and partly because of this whole number here, the 200 area here. So long on top of that. Yeah, I might double check all of that, but I won't take up your time here. We're just going too long, but it doesn't matter if it's a long video because, you know, if you're looking at this, then you're in the zone learning something with myself. So let's go back. So we know we can go long on support at this level here. All right, and you'll need something like that. You see how the market comes back up and checks it, and then you take that the next high, this high here or this high here for that. That's what we'll sort of build on over here for that. So you want that the market's got to it's got to check, and that's the testing, the retesting. So if we go back to our maybe 15-minute chart here. Right. So we can go long above here, but also you know that you can go long on top of, I'm putting that at 12, but you'll know that that's at 10 there, that's at 10, 11. So you know that you can go long above those guys there. And with this here, I mean, it could be an A and a B and a C and finished right here for that. So we could collapse. So one of the first things we need to look at here is that just from that low to that high here, just good to know where this particular point is here. So that's going to be the support coming into that area there. If this market on the short side, if this market here, this is the top, this is an A wave and a B wave and a C wave here. It may not be finished. Let's just exaggerate it down a little bit further. Let's just say it drops a bit further, whatever, and then goes back and tests it at that point. Then you could also go short from here with a small position here. I'm just going to put a thin line there in green. So you can go short at that point there. This looks like 1 and 2 and 3 and 4 here and 5 here. So it looks like 5 waves up at that point, doesn't it? Well, another way to look at this is we know that this is the 200 here, so we can put that in here. So obviously I haven't done all my homework here, but we've got group 2 here, which is 80, 65, 72 and 80, so 72 in here roughly, and this one here is 65. And then you've got group 1 above there, so if I copy this, we've got 2 here, 30 here, 30 there, and 10 here. So in terms of the trading levels, when you're working with a minor level here, then we just drop down to the sub-levels. So sub-level is 1, 2, and 3 above, and 65, 72 below here. So it's really good to understand this. You could be working at any degree of structure, but you find your largest number and then you put group 1 and group 2 here. Now the general idea here is that if you get support on top of group 1 here, like a nice tested support, then you're going to be leaving this number and you'll go to the next number of the same degree, the 300. And that's what you're trying to do. You're trying to trade from 100 to 200. Once you get out, look for the next setup and then go up to 300 and do the same thing again as well. So on the downside as well, if this group 2 here, it's here to support the market, to help it stick to the number 2 here, the 200 here. So if this becomes the retested resistance, then we're going to be going down from that point. We'll be heading down from that point. So even though this is the 61.8%, and it will give you a bit of grief at this point here, but when you see this here become the resistance here, you can get a small position here or another small position here. And then if the 61.8% here becomes the resistance, you can also get a position there as well for that. So under here and under here for that. And then you know, once it gets to this point, you know that you're going to be taking that low out at that point. So anyway, I've tried to cover the long and the short of it. And Yeah, we should be pretty safe. Just don't overtrade and pretty much stick with what I said, and we'll track higher from that point. Alrighty, cheers.